In 2007, 8, and 9, when we had the Great Recession, multifamily went down with everything else, but it was the first to recover. And so its cap rates have been specifically or directly, they've been very tight. Let's put it this way. They've been very tight ever since about 2012. The cap rates on multifamilies have been very, very tight. I have not bought back into multifamilies until this last year because I was unwilling to be with a cap rate that was lower than the interest rate that you could get on a property. And that required being able to be creative and changing over to a different asset classes.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter.
Hey you, this is Christina Suter with Real Estate Breakthrough, and I am talking with Mariciela. And I'm going to say her last name even worse than her first name, so I will let her do that. But she's with Plex, and I met her specifically at, I think, the Best Ever Conference last year, and then again this year. And we connected, and I realized we had never actually done the actual podcast itself. So here we are today to actually do the podcast. And I really love her and her partner, Chris. They are amazing human beings that are trying to actually serve their market with as much integrity and personal service as they possibly can. So I'm going to let her tell me a little bit about her history and what it is that Plex specializes in.
Awesome. Thank you so much, Christina. And as I was telling you earlier, the fact that you have the purpose and the dedication to your audience to bring this podcast, it was really nice because you all did the follow-up, and that's one of the hardest things for any business, really. So thank you for having us here. Yes, my husband and business partner, Christopher Linger, both of us are very involved in the company. Our company is Plex Multifamily, and the Plex stands for the complexity of assets that we bring and combine. What we do is we buy real estate assets, commercial, multifamily, and we invite passive investors. We are also diversified to multifamily, self-storage facilities, mobile home parks. We do private lending. We have a fund where we also bring investors and partners, and we also do notes. So all of our diversification, it is within the real estate. So all of our investments are backed by a hard asset in some way or another. We are very creative. We have done joint ventures, syndication model, buyout, solo. We started in 2006 with a duplex, and then grew that portfolio to 35 apartments in Austin, Texas. That's where we're based out of. And in 2020, something happened that shook everybody's worlds. And one of our aspects that we were faced was in the medical community. My primary job I'm an anesthesia provider. I work in the hospitals giving anesthesia, and that industry, believe it or not, is being taught that you always have a job, that you that's never going away. And although that is true, if the medical provider is not diversified, if that source of income stops, like it did for me, that's it. Like you are at somebody's hands, and like you're talking about building wealth and building your sources of income. We did not want it to be in a position that all of our income came from one type of cash flow. So it was thanks to that we were able to look at our portfolio and really rethink what we were doing, because at that point we were doing everything just the two of us with our own money, and we were thinking too small. We were too involved in the business. We were operators at heart. And it's only so much you can grow when you are in that mentality. So that's fast forward to this year, 2025. We are in over 300 apartments across 4 different states. Mobile home parks, we have 500 pads. That's what the rentable areas are called. And we have 2 storage facilities. We have gone full cycle probably in about 5 commercial properties, and about 12 of our initial portfolio. We also do coaching for people that want to do their own portfolio. We do business coaching, and that's how we're able to impact our community and help everybody grow.
I know that you guys have diversified across different assets, and the industry has almost required it, because when multifamily, like in 2007, 8, and 9, when they had the Great Recession, multifamily went down with everything else, but it was the first to recover. And so its cap rates have been specifically or directly, they've been very tight. Let's put it this way. They've been very tight ever since about 2012. The cap rates on multifamilies have been very, very tight, and I have not bought back into multifamilies until this last year, because I was unwilling to be with a cap rate that was lower than the interest rate that you could get on a property, and that required being able to be creative and changing over to a different asset classes. And I feel like you guys have done the same sort of thing as well. Not only were you able to diversify outside of multifamily, which I think what you guys held in your personal portfolio was primarily multifamily. And now you guys have really discovered being able to be able to have a variety of different asset classes, because like you said, you can get closed out of an asset class or an industry where supposedly you never have a problem, but even in anesthesia you did. It was amazing during COVID, the amount of that we had. The hospitals were super busy, but the amount of surgeries that were canceled, right? They were unless it was life-threatening, even for cancer, unless it was life-threatening, they were not going to actually do cancer surgery on you, because they were so full of trying to manage COVID and COVID patients. So it was an interesting time. So why don't you tell me a little bit more? I think one of the things that in my experience in listening to you guys, and I don't know if this is part of your brand or not, is that your level of personal customer connection and care. At least that was my experience of you and Chris when I met you guys, the way that you really focused on being able to take care of people and finding a place that's appropriate for them to be placed.
Yeah, as you mean by like the population that we serve, like our tenants?
No, I was talking about your investors.
Yeah. So it is actually part of what we do. We are we're diversified. We have committed the time to bring I think it's now 18 new partners that they learn the business, or they invest in business in a multifamily or other assets where we syndicate, because what we teach them, we teach them how to structure deals, how to find the deals, how to underwrite the deal, raise their own capital. We can partner, or we can help them do their own. We spend quite a bit of time doing that, and that for us is very important, because what we refer to the kids will grow up, and the people that you help at one point or another in their career, you never know where they're going to find themselves later, that they might be the ones that help you. And if you do them right, if you teach them right, they're always going to end up in a good position. So we do spend a lot of time doing that. In fact, I will say average one or two new partners in each deal is what we try to do. Some of the deals are smaller and it's a joint venture, but even then we spend quite a bit of time teaching what we know. Being both from the military, we know that at one point there's only so much we can do, and so our goal is to pass on the knowledge, because kids can do it sometimes better than us. So why not tap on that potential? And there's always that opportunity to leave that legacy in that way. So
it sounds like that's kind of the secret sauce of Plex.
We grow together. We go up together. Mm-hmm. Yep.
That's what I was trying to talk to and I don't know if I said it very well, but I think that the amount of care that you guys give to the people, not just the property, but the people that you guys interact with, is very clear. And so you said you also consult with people. Is that a formalized consulting practice, or is that more of you consult with people you joint venture with?
And no, we have so no, we do both of them. Some of them are deals that we're part of, and we are that we're a partnership, so we're going to get together anyways to do the going over the business plan and anything that comes our way in that specific asset. But sometimes people bring their deals that they're looking at, or they're going to partner with somebody else and they just want a second set of eyes to, hey, tell me what you see, so we do that quite a bit. Also underwrite deals for other people, like we have a team that can underwrite, so for us it's like that's an easy way to gain proximity to those that are doing deals, and also get to see what are their assumptions, how do they like their deals analyzed, how risky they are. We get to know them and at that level, so we use that as an opportunity. And so yeah, those, and we also coach for other businesses outside of real estate. So in that aspect, our goal is to help business owners that are busy to scale their revenue, to scale their business, and eventually they will make more revenue, and they will be like positioned in a way that they can be investing with us or partnering with us. So that's another way that we can fill up the pipeline for business. For GPs or general partners and or investors.
Okay, beautiful. So why don't you tell me a little bit about like what financial freedom I feel like is one of the big topics that I focus on specifically, and using real estate to break through to your financial freedom. And so, but that's not always easy, right? There's two parts to that. One is the joy that we're constantly looking for and creating our financial freedom. But the other is you also need to be a good problem solver. I mean, we've all run into projects that did not work well, and that we don't like. We all have. I can tell you several stories of projects I've been involved with that did not work well, or at least something that had a problem in it that I had to solve in order for it to get it across the finish line, right? And so why don't you tell me a little bit about a project that you guys were involved in and how you guys solved it? Because the solving of it is really sort of the money-making move. The money-making move is the capacity to solve a problem. It's not just the numbers we can project, but the actual experience of, oh shoot, now we've got a problem. So tell me more. Tell me about something you've done.
Yeah. So, well, when you acquire a property, the lender will ask you to have a business plan in place, and then everything goes around that, fulfilling the business plan. And there's checking points and all that stuff. That's kind of a predictable, because it's common practice in the business per se. But then all of a sudden something happens that was not part of the business plan and was out of your control. One example that I can think of right now is a beautiful property in Allen, Texas. Just highly desirable school district. The numbers look beautiful, supposed to cash flow by immediately, but we wanted to help for the first 6 months. And then in the first 6 months, like almost to the date, we got a fire. A whole building went up in fire. Again, insurance claim and all that stuff. Like it was an accident. It was nothing. It was not like due to the structures or neglectfulness. None of that. It was truly an accident. It was really sad to have to relocate in the middle of the night. Those families. I mean, you learn to be resourceful and learn to have some systems in place. Like what is the communication gonna be like if something like that was to happen? Thankfully, our property manager has had that experience, and they knew like all of that, like procedures, who gets called first, who can release information. All of that is it is definitely a learning curve if you haven't faced that difficulty. But how do you solve it is like, okay, now the families are taken care of, nobody got hurt, now what? And then you go back to as a partnership, how are we going to keep that pipeline of communication open? Who is in charge of what? Because everybody wants to help. I mean, it's almost overwhelming the amount of help that you get, and you're like, wait, hold on. So managing it without obviously closing the door and be like, no, I got it. So it is a coordination of efforts that goes behind anything really that comes as a surprise. But what I can say from having had that experience is that the business itself is going to be stressful. Like it doesn't matter if you have the most pristine property and the best tenants, residents, there's always going to be that level of difficulty that comes with the unknown of the business. So having a partnership, like a group of people that you can communicate in highly stressful situations, or just like, let's just catch up and just a regular call. Some people tends to be really, really intense. So managing these personalities, and what's needed, really, all the resources that you have, it's going to be one thing that you can really get to know ahead, like how are your partners going to react. So a lot of it's going to be let's try and error. So the better that you get to know your partners ahead, and that you have some kind of processes in place, that who is taking the authority, who is taking the leadership for such projects that are last minute and not necessarily practice or rehearse for, is what's going to be what saves really the deal. However, and the other thing that I want to share here is, like, nothing beats an open communication with your partners, with your investors, even if it's not good news, because in that case it wasn't good news. Like, we're supposed to distribute this month and now we are surviving, so but like, continue to maintain that open communication. That's been something that it doesn't matter what kind of news, or maybe you feel like they're bad news and people are like, no, I get it, I understand it, because they're smart people. They are, obviously they're investing and they know the risks. So, but sometimes we tend to just like, no, I'm not ready to communicate, or I don't have good news, or maybe if I wait another week, but that week might be something that they appreciate, even if you don't bring them the good news. So always keeping that line of communication with partners and investors. No matter what kind of news you deliver, it's going to be more valuable than waiting for the perfect moment or the perfect a level of completion of the resolution of the problem. Is best to deliver what you have at hand instead of just waiting.
If you were to bottom line what it means to about staying in communication with your investors, just give me a quick idea on what you would say about that.
Yeah, the sooner that you communicate, it no matter what kind of news you're going to bring, the better they're going to be received. They're going to be appreciative. Your investors and your partners deserve that clarity, and that the sooner that you can deliver that information, the better. It's going to save you. It's going to put you in a good position, in a position of a leadership.
I did almost a whole podcast almost entirely on communicating with your investors with a gentleman named Chad Zdenek. And he's a capital raiser, and he was talking about how his capital calls he is involved in several deals, and two of them had capital calls at the same time. And he said one capital call went so much better than the other because one company had been communicating so consistently, that his partners in that deal had been communicating so consistently with their investors. They were not startled, they were not upset, they were not as angry. I mean, and that's just from the beginning of the deal, versus the other one who was only communicating when there was either great news or there was bad news. And then they were so much more disoriented, and the investors were so much more resilient or resistant to being able to put money in the capital call. And I thought, wow, just a real live example of the difference and how important it is to stay in communication with your investors from the beginning with consistency, so they built the trust with you before any news goes out, good or bad, building the trust all the way along the way. So now you guys are now in several different industries. So tell me a little bit about how you guys have managed that, so that you are in several different, like you're in storage and you're in notes and you're in multifamily, and yet you guys are a very competent but mighty smaller company. Tell me how you guys managed keeping all those assets successful.
Well, first of all, we have a team. We're so grateful for them.
I still know about a team. That's exactly. I'm like, well, it's going to be team. But let's hear about how you do that and how you have your team be successful, please.
Yes. So couple things. Yeah, definitely a team, because there's a lot of busyness in this business. being busy, a lot of things that are very time consuming, data managing, analysis every so often for all your deals, like keeping KPIs across the portfolio. I mean, those are very, very busy tasks. So having the ability to delegate that and then have the high visibility that if something looks red, or we use red for the percentage changes when it's negative or too much of an increase on expenses. So if something is red, it gets my attention. If something is green, okay, let's keep managing, but having that simplicity, like a color, literally a color coded KPI that we get. So that's one, having the ability to delegate the busy tasks that still need to be taken care of. And two, have competent partners. And we have the opposite, and that's why we are able to appreciate those that are doing their part, they're doing their contribution. And if we are all agree on you're doing this task, that means you are doing that task. I don't need to be following up with you. The task is completed on time. Like that is one thing that it just saves time across all the partners. So if you can have, when you're interviewing your partners, make sure that you ask them, hey, and any other deals, how do you carry these tasks that you're willing to do for our partnership? Have examples, have them send what do you call it, reports if possible. Do if they're saying, well, I want to organize the agenda for the meetings. Okay, send me some agendas that you organize, because what your organization might be different than mine. So I know it sounds really picky, but when you have that understanding and everybody's understanding of what their portion of the task is, you're going to diminish all this extra 5-10 minutes in every meeting. Or meetings are like 15 minutes, 20 minutes if you have to go on a deeper dive for something else. So just being very effective with your time. And we have some partners that we have to hey, this meeting cannot be about the weather. We have let's get to the KPIs and being very efficient. And that again comes from the military. And the military, you go in a meeting, everybody hits your points, what needs to be completed. Okay, let's go. If there is enough time, you can then chit chat after, but get to the meeting. Like a minute late is late, so because you start augmenting all of those, the time that it is just repetition or anything that doesn't need to not need to be taking place, eliminate that. The things like you want to track, if that doesn't give you any data that it saves you money or time, then why are we tracing that data? It's okay to pivot, it's okay to make those changes along the way. So I think every business owner, and this is what it is. This is a business that we're running. We're running multi-million-dollar businesses. So the more that you can be focused on that, on the KPIs, on your goals, the better it's going to be run. And then you can be friends and you can, chit chat and catch up. But
that's good. I like it. I can imagine 15-minute meetings with the KPIs, and if you're a minute late, that's it. You're already late. Like, we're moving on here. Well, and if you take a meeting that's normally 30 minutes and you get it to be 15 minutes, then that truly is, in some ways, doubling your time. Because now it's like, no, this is what we're here for. This is our conversation. We're moving on, and we'll talk off the clock at another time.
So send me the points that you want to discuss. Or send the points that you want to discuss. Don't bombard me. Like, it's okay for us to take once in a while an extra topic that came up, but overall you cannot just be reactively giving time to a topic that comes up. If that person continues to have that same unprepared agenda, well, what's going on here? We cannot have, if it's not important, we're going to have to book another call. If it's not important, it needs to be in the agenda so we can revise it and talk about it in time. You cannot be surprising us with bombarded last minute addition to the agenda, So that's one of the biggest things I think for us to conserve the time. We are across, I think it's 18 or 20 projects. So imagine if we let every single project run 15 minutes late.
Right. That ends up being a lot of time being eaten up. That's pretty amazing. And you guys meet with your joint venture partners or equity partners, or syndication partners. You meet with them once a week in general, once a month?
It depends. So depending on the project, some of the projects are already stable. If we meet in with the property manager every week, usually every week, sometimes we get to every 2 weeks. But again, our meetings are focused, and but for our partners, we dependent. Some of the partners that are in the same deal, we try to group them together, and then we talk about 2 or 3 deals. Same thing for the investors. If they already are in a couple of deals, especially with the fund, we just do one call and we cover different deals. So it's just efficiency with the time, and everybody feels included. Like they start feeling like, oh, we're in the same deal. They feel like if they miss something, they can reach out to you because you're in the same deal that they are, stuff like that. We try to group them. Obviously not all the partnerships are in the same deal, but maybe one day we'll all be in the same deal. We just move from deal to deal.
Well, it is. I guess it is hard though if you've got somebody who's an expert in storage, and then you've got somebody who's an expert in like loans or performing loans. That's not necessarily the same as the expert in multifamily, but it is super fun when you can get a reoccurring team. When you can get the reoccurring team together, that is super fun. So I can see that as an advantage. So the other side of being a real estate investor is financial freedom. So this show, and the name of the show is Real Estate Breakthrough, because we're all trying to use real estate to break through to our financial freedom. What does financial freedom mean to you? Like, everybody's definition of freedom is actually different. So what does financial freedom mean to you? What are you building for yourself in your life with your company?
For us, couple things. One, to have enough capital to then make decisions not based on where your next income is going to come, but mostly what's most convenient, like location wise, time wise. Can I pay somebody to help me with this aspect of the business, so that the whole end result is that you're in control of where you want to do, who you want to do it with. Location wise, for us is huge. We travel a lot, and if I have to go to the hospital or to any job to earn my income, is very restricting. So for us to having the freedom not only of the income coming in, but also having the ability to do it from wherever we want, and really with whoever we want. Like at this point, we're in a time in our company that we get a lot of people that want to do business with us, which we're grateful for. And we don't do business with everybody, because sometimes it's not about making money, but it's about who you're spending your time with. We choose people that were fun. It's just fun to be around. That is a quality of life, instead of like just going after the next deal.
Okay, so financial freedom to you, to bottom line, it really means being able to make decisions based on who you get to interact with, and having that freedom of time and money to really be able to choose the deals that you feel like works for you and your community. That's what I heard. Is there anything else in financial freedom for you?
Yeah, but you hit that right, and you summarize it beautifully. I also feel that the ability to impact others. Like, do you have what it takes? Can people look up after you and say, I want to mimic what you're doing, because you're doing it in a way that is desirable to other people. So that is huge for us, that we get people that follows us because of that reason. And we're always happy to share so that they can achieve the same or better.
Yeah, see, I'm not surprised by that, because like I said, every time I talk with you guys, you guys don't always say it directly, but it always seems to be built in. The way you build community, the people you interact with, how you really want to support that community, whether it's people who are joint ventures or whether it's people who are your investors, that you guys care so much about making sure that you're connected and working with good quality people, creating good quality projects. That's my take on when I hear you and Chris talk.
We appreciate you. Grateful to know you.
It's good to know you. If people want to get a hold of you, if they want to invest in one of your deals, if they want to joint venture with you, what do they need to know about how to get a hold of you?
We have the same number since decades, so 512-900-9763. just that's the easiest way. Just text us, and then we can take it from there. We're mom and pops type of get, let's get on the phone. There's a lot more information that we put out, but that's the most direct line.
People can also go to your website, because there's there's connection, experience, there's invest with us, there's more information they can find out about you guys. But as a mentor of mine used to say, eyeball to eyeball and belly to belly. And I just still feel like that's a really good description of we're still here having a human interaction, eyeball to eyeball, belly to belly. This guy had a bit of a belly on him, so sometimes it might literally be belly to belly. I don't know. But I just appreciate it, because it's old school. You can't get around that this is really about us providers working with people. Our asset class happens to be real estate, but what we're doing is making an impact with people personally and directly in their lives by giving them a platform to invest in, or being able to educate them so that they're more successful in the investments they're making, but really having that community work together and thrive together. And you can't get around that ultimately, I think, is the most valuable piece of what we're doing.
So true. So true.
Thank you, Mariciela. I have to work so hard to say that. I apologize. But I took 4 languages in high school, and I didn't do any of them. So I didn't do well in any of them. Forgive me. But again, I hope people reach out to you and they really get a sense for what it is that you and Chris do. Thank you so much. This is Christina Suter on Real Estate Breakthrough. Tune in every 2 weeks to get a new show. And don't forget to see me on a variety of social media platforms to keep you up to date, both on investing, multifamily, and economics. Christina Suter.